Ajay Kanwal, Managing Director and CEO of Jana Small Finance Bank joins us. When you went public, it was not such a great listing, but after that everyone is now realizing that story mein dum hai. Right? I looked at the numbers and good set of numbers.
So Nikhil, very good morning to you and to all our viewers here. Listen, our job is to run the bank. It's for you and the investor to decide the list pricing. But I must tell you this, it's our best ever quarter. And the best ever quarter has happened after the IPO.
Yeah. And the best ever quarter when the liquidity is worst ever.
Liquidity is tight for sure, but nothing which should worry generally us or the industry in general. But if you are an investor in the bank and you looked at the result and said, okay, good, I invested in a bank where post-IPO the results are better than pre-IPO. And so that gives us a lot of happiness.
So yeah. We've clocked now, you've crossed this watermark of 100 crore plus. Is that the watermark which you've established that now every quarter is going to be north of 120, 130 crore with incremental quarter-on-quarter growth will start building in?
So Nikunj, our business is very steady and very retail in nature. So it's a very run rate based business. So run rate businesses typically tend to only multiply on the positive side. So yes, I would think that we kind of have put a floor to where we should be looking in the future in terms of profits. But I think more importantly for us, see, our RoA is now at 1.8.
Yeah.
Our RoE for the quarter is around 21%. So our focus really is RoAs and RoEs while keeping gross NPA and net NPA in check, right? Because growth is not a challenge on the asset side. We are comfortable on the liquidity side. Just make sure that we are doing quality loans. I think that will keep us very even and very steady.
How will you get liabilities? There is a war of liability. I mean, HDFC Bank is struggling. So would you be paying more than what others are paying to get liability franchise?
So we are a very small player in the liability business. We just have 21,000 odd crores of deposits. And if you see last 9 months, Nikunj, our deposit has run faster than assets. So our deposit growth rate is about 37%. Asset is 28. So on a growth last 9 months, we are positive. And listen, for us, the expectation is very small and we are in the growth mode. So, new branches are coming up, new relationship managers are being hired. We've just launched our exclusive and premier segments. We are investing in the NR business. So, for us, getting 5,000-7,000 crores a year, I think is very relatively around 20.5 when we began the year. It's come closer to 19-ish now because the deposit growth has been far higher than the CASA growth rate. But, I don't see why we should, of course, we are very focused and want to make sure it happens right. But there's enough runway for us to grow the liability side.
Congratulations, Ajay, firstly. Since listing, your stock has appreciated, 24%? And I'm sure you're tracking the stock as well.
I must tell you that, yes. First day when it listed a bit lower, everybody asked me why it went down. Next day it went up, they asked me why it went down. I didn't answer both questions because I didn't know the answer to either of them. But I do know how the bank is doing.
Your stock is flat today. Your stock is flat today. Now you can answer the question.
I still don't know the answer, Nikunj, why it is the way it is.
What could puncture the enthusiasm that you were just alluding to? Because there is stress in the MSME segment. Do you think that could pose a challenge eventually to the numbers?
So I must tell you, 34 years in banking, we always say that the best loans or the worst loans are made in the best of times. So I think one has to really watch what you're doing and try and stick to core. That is very important. Because, moment you are making money, then you want to be a bit more ambitious, take a bit more risk, try new products. I think if you just stay very steady to what you're doing, don't let exuberance carry you away, I think you'll be fine. And this is the time where you have to be really mindful. Because then it's like when we have extra money in our pocket, we do tend to spend extra when we go shopping, right? Because we do have the ability to spend. Institution is very similar to a human being's behavior, right? You are making a lot of money, so let me try this, let me try that. Right now is just learn to say no. You know what you're best at, stay there, and don't try and be somebody else. I think we'll be absolutely fine. What are we watching? What worries us? Execution. It's a retail business. It's an MSME business, right? It's nothing very complicated because the most complicated part is execution. So we just focus on execution, we focus on people, remain high touch with customers. I think we should be very steady. And I must tell you, we are very watchful. We talk about that in the bank all the time. Let's not get overconfident with our results. Let's not feel very happy that we are doing well. We just have to be more than watchful than ever.
I think that's an interesting statement that you made, that worst of the loans are made in the best of the times, and we are probably in that best time. So which is the category that you are a bit worried about? Because secured part of the book, I think, has reached 60%. What's the target where you want to take a secured book? Because RBI too has been very vocal about the unsecured business.
So, I said this
The
earlier.
presenter conversation.
See, we are very simplistic in the way we think about strategy, Any individual will have the highest loan, will be his home loan. Right? If he's got a home from parentage or his investment, it will be a loans against property because that gives him the cheapest rate. Next loan will be a car loan, then maybe a two-wheeler loan. And in the end, if he has some urgent need, I hope then
Some
it's a personal loan.
yeah.
Or if he's gone overseas and he's like some nice expensive item, he will probably have a credit card. Right? I can see you smiling. I didn't want to say Prada or something else.
7 lakh ye allowed
It's for
hai.
the
So,
devils.
80% of a consumer is secured, right? If 80% of a consumer or 70% or 90% as it may be is secured, then why would the bank be anything less than that? Because we are very customer focused, saying what does the customer want? We are here to serve him. And so naturally we are moving in that direction. So we have seen that happen over the years, and to us that is very brilliant. See, a secured relationship of a consumer with the bank is 7 to 10 years. If you assume actual life, contractual is 15 to 20, right? If you have a consumer with you for 7 to 10 years, isn't that great for a bank? And great for the consumer also, because the bank knows him, can do multiple products for the family, next house, very different. Also remember, our home loans are not investment properties. They're actually homes and offices. That's the least amount of risk that any consumer would take is on his where he stays or where he does his business. Investment properties we have seen in cycles can get impacted, but certainly not where you stay or where you do business.
You are growing your home loan, but that's a brutally competitive business. It's a business where SBI has kept rates low. There is HDFC, which has become HDFC Bank now. What would be your USP to ensure that, okay, it's a great book to build, but it's a book which perhaps has not the best spreads?
So, very good question, and I must say, listen, I play, my USP is the affordable housing segment. My average ticket size is about 12 lakh rupees, right? And that's my segment that I can't compete with prime mortgages at 8 or 9%, because that is not where my cost of fund is. That is not where my USP is. And also remember, we began as a microfinance institution. So last mile, small ticket, digital, that's where our strength is. So we just play there. Now, affordable housing, 9 months, our growth rate is 61%.
Yeah, I looked at your
right?
presentation.
And that 61% tells you there is a lot of demand. But you need institutions who are willing to then step up and say, hey, listen, this is a 10 lakh rupee loan. The person has a plot of land, wants to build a simple home on it. I'm comfortable, dealing with a customer with 10 lakhs and giving him that kind of money and that kind of length of duration. Now, the other piece is, so I don't compete with prime. Now, the way our home is structured is, moment your home loan is done and you're a good repayment with me and you're good on the bureau also, I will offer you a two-wheeler loan.
Okay.
Right? I'll offer you a business loan. I'll offer you a personal loan. What we do with the consumer over the lifespan is, and when I say lifespan, not 3 years later, at the end of 6 months, 12 months, based on behavior, we offer him the next best price. So if my consumer actually comes to me for a two-wheeler, he gets a lower price than he gets in market.
Yes.
He also gets a higher LTV than he gets in market. Because I have his home. I know how the customer is. So the customer gains, lower price, better loan to value. I gain, I have no acquisition cost, I've got better credit. So really taking home as the anchor product and then working with the customer next 7 to 10 years, I think will give the opportunity both in low gross NPAs, low cost income and preferred bank for customer. No customer wants to take home loan from one place and two-wheeler from another place and business loan from another place. It's just so difficult, KYCs and multiple repayments.
Relationships also matter, servicing also matters.
Correct. And, sorry, go ahead.
No. So I'm just trying to understand the model here. If I say that, look, Jana Bank is a small finance bank, but they have experience in microfinance, but they are not competing with the big banks. They are essentially competing with the NBFCs. And the reason why they will win over NBFCs is because they have a strong deposit franchise and the costs are lower. But the target audience which was getting from an NBFC loan or a unorganized loan, that's the pocket you're going after, and that's why they've paid higher rates and you will give them lower rates.
So there could two things. One is no customer, whether rich or poor, likes to go to multiple institutions, right? So middle India should bank with a bank which gives them from a two-wheeler loan to a home loan to a lab loan to a business loan to an unsecured loan, right? If the customer likes to go to one institution for all products, we are the answer. So that's the answer on the middle of India. Second, being digital allows us to take that level of small loan size because easy to service now. It's not high cost anymore. So I think that makes a second difference. Third is culturally how you are. And that's very important. When a customer who wants a 10 lakh rupee loan comes into your office, you have to treat him as importantly as a person with 1 crore. And that only comes if people in the organization feel like that. And once you feel like that, then the customer also knows, oh, they are welcoming me, they like me, they want my business. He doesn't feel that he's not wanted, which is exactly the role of a small finance bank. Right? So I think our winning answer is a customer gets multiple products, so we become preferred over institutions which give single product, which are largely other institutions that they go to, right? So if you go to a two-wheeler organization, you can't expect a home loan. But in case you take our two-wheeler, you know that you can get a home loan offer. Right? So multiple institutions, digital service, obviously as best economically on price as possible. And of course on the risk side, because we have the home as a benchmark, we can do a lot more. So I'll give a simple example, Nikunj. If you take a business loan from me, I'll charge you only 18%, while you could have paid 30 to 40% outside.
Yeah.
But in the business loan, I will write a simple line which the customer knows fully well that that loan is cross-collateralized with the home.
Okay.
So he gets cheaper price, he gets an offer which he likes, he gets a longer term to repay. He is positive in all three.
Yeah.
I am positive because I have the home as a base, and so it's a win for him, win for me. He can't get that offer anywhere else, but I'm very comfortable making him that offer.
But Ajay, put it into numbers because I'm sure that's what your shareholders in the markets would want to know. And I'm not talking about quarter on quarter, maybe a year down the line. Where is it that you see your NIMs, your NI, etc. settle down and asset quality?
So NIM, so first I must say ROE, high teens, ROAs, north of where it is would be a good number, right? Because I do think that what is happening is we are normalizing after COVID, and which is why you see March NIM was 7.6, December is 7.9. And this is after absorbing a 40 basis point cost of deposit increase. So if you had assumed a like for like, we would be 8.3 NIM. So our NIMs are getting better. Our net NPA is 0.7 or 8 now, right? Gross NPA at 2%. So asset quality is good, growth rate is good. I think we'll remain steady there, which is our secured business will keep growing. That's rule number one. We will maintain good asset quality. We'll maintain ROEs and ROAs. We are in a comfortable liquidity position. Our CD ratio has dropped from a 109 to 104. But I must tell you, for us, the one advantage is our lines of business are open for refinance from NABARD, SIDBI and NHB. These are long-term refinance institutions. So 5-year, 7-year, 10-year loans at very good pricing. So we tend to obviously borrow from only these three institutions because these are longer term. I can't get a 10-year deposit.
Yeah.
But I do get an NHB refinance for 10 years. And that does help my ALM. So I do tend to borrow from them. I have a good branch network. I can grow it comfortably. So I think right now we are very steady. So if you're an investor looking at us and saying, listen, he'll maintain good asset quality. He'll build a resilient book, which will, even if by chance something happens, he's the strongest. And he'll deliver ROEs and ROAs. That is what you should look at us.
So if that same run rate continues, we are looking at perhaps your book doubling in about 2.5 years?
Yes. Because I haven't calculated like that.
I look at it this way.
Yeah, but listen, like I said, for us, growth is not something that we find as a constraint.
Okay, so
Right.
let me flip it. So growth is not a constraint, and
Yes.
if you are squeezing operations and efficiency kicks in, that means if you are doing 100 to 120 crore a quarter, if everything goes through, I've simply put a multiplier, 15% say 20% ऊपर growth, about 25 bips improvement in all ratios. That means you could be in for a 170 to 200 quarter somewhere in FY25, logically.
Okay, mathematically getting there, but as you know, forward, we have not given a forward statement, Nikunj.
But logically, the way I'm thinking in terms of the growth trajectory, that profits will be higher than the top line. If top line is 15 to 18%, which is what the industry average is, you're a small bank. I'm simplifying it for our viewers. You will grow at 20 plus because of your base. 15 to SBI, right? You will grow 20% plus. And in 20% plus, PAT will grow higher because efficiencies was kicked in. So if SBI profits are growing at 20%, then you should grow 25 to 30%, which means in 2.5 to 3 years, you should double.
Right.
No, I'm making sense, right?
Right. See, listen. So your match is good. So I have no. you're too sharp for me.
My teachers never thought that when I was studying school. I used to always get the other way around.
Oh,
maths में क्या करोगे? बेटा पढ़ लो लिख लो.
I saw
You're the first one who
I
said-
saw you questioning the global leaders during the Global Business Summit.
Business
And
Summit.
congratulations for that. I
Thank
can
you,
tell you're
thank
very sharp, Nikunj. Listen, we are focused. I mean, if you ask me,
No, first the maths.
I'm
सही है गलत है?
I'm not walking away from the maths, but I'm saying, listen, my bias is focusing on the input. So what is my input? Customers with secured loans, good names, good quality, right? Managing cost through digital. If I do this multiplication, I know the output.
Exactly, which is
Right.
what I'm arriving at.
And you already focus on the output. I spend time on the input. Because, that input is not about next 2 years or 3 years.
I understand.
That's about how we build an institution for the next 100 years. It becomes secured, culturally focused on, good credit. We're making sure we're growing liability at a pace that the cost income can handle it. And also getting customers who will then be another opportunity for the bank to grow later. So I think we're only focused on the inputs. The multiplication in the end is the natural output, which you have done very nicely.
And Mr. Kokreja was my maths teacher. I still have his number. I'm going to send him a text, maths, sir.
Send him this video bio.
The student's done
Yeah.
rather well in maths now.
Yeah.
Thank you very much. Congratulations on listing. You
Thank
should
you.
be prepared for many more interactions dealing
Thank
with
you.
press and shareholders.
Thank you. Thank you so much.
Congratulations.
Sweet of you.
Life
Thank
after
you.
listing.
Yes.